actual view because a lot of people are going to be watching this. So quick state of the server, we're going to crack down degeneracy. We're going to get it straight out of here. Most of you guys have already realized and started to lock in more and stop messing around. We can't let this slide. So everything in the server has to be trading related unless you go to off topic. But you guys should really start locking in. One of my friends, he bought a Hellcat. I got so much clips with him tonight. There's this one kid I used to trade with, or I taught how to trade. He just bought a Hellcat, and we've been abusing it all night. Both of our cars. So,
Excuse me?
okay, just wait. We're gonna start the recap now, okay? So right here, going to the 9:30, I wasn't really trading. We were trying to watch ICT's live stream, and then it cut out. So I had OT of this entire range marked out, and I'll show you my short. But we had OTE 705, and I absolutely love this zone for OTE. We come in, we tap it perfectly after running this high. Also, keep in mind we're slightly above new week opening gap after respecting it, and we're slowly pushing up higher. But OTE of the 705 range, 5-minute fair value gap, we're about to enter lunch. So what you want to do, you want to scale down, and you can see our bodies are starting to respect this fair value gap. And what do we have? I'm going to remove OTE because you already know that we're in OTE. And I'm going to hide the new day opening gap because you could already see how it's giving, I guess you could say, confluence in the market. Run up this high. Bodies, watch this real quick. Look at how the bodies are respecting this 5-minute higher time frame fair value gap. This is a really good indicator for strength. So keeping that in mind, shift the market structure right here. This is where we shift the market structure. A lot of people could also call it change in state of delivery off this order block, but me personally, I want to see, or this was a model 2022 in my opinion, because we had to shift the market structure, run lower, and I'm going to draw our premium and discount from this high down to this low, and we had to return into premium. If you could throw OTE in there if you want, but I would just keep it simple, stick with the, how do I say this? Market structure shift and retrace into discount. So I'm going to keep this, you could call this a breaker and fair value gap. So this would technically be a unicorn with a BPR right here. And the bodies respecting this was just so perfect. And this is where I took my short. I'm going to open up my journal, which I've been doing really good on my trading recently. I've been actually myself locking in, but these are all my confluences. So looking back at that, I drew out standard deviation from this high down to this low, and something I really like to do with standard deviations, which this would be a really good example. Also, one more thing, this is the new week opening gap. I'm going to remove this, but that's also another confluence for us to go lower. But you want to draw out from this low to this high, and when we have standard deviations, you do not want to be targeting the one in premium. You want to be targeting the one in discount, or better yet, the fourth standard deviation. This is probably the best case scenario. We have a fair value gap right here that needs to be filled if we have to continue higher. The price has a rebalance PD raise. So we have this fourth standard deviation fair value gap that's likely a higher time from target. But with how I'm currently trading, I want conservative targets. So we tap into our unicorn or model 2022. Stop goes to mean threshold slightly above the order block. And then I target our discount second standard deviation, which it got edged first. What's up, everyone? I see everyone in chat. Hello, guys. But what's up? Yeah, you could also call this 3 drives. Someone in chat or my YouTube chat said that this was 3 drives. And this is true as we ran this out, this out, this out until we went into OTE fair value gap. That was just perfect for shorts. We could have targeted lower, but I really want to see more of a conservative target. And I'm going to look for any type of trades I miss and try looking for logic behind it. And yeah, this is just more of the recap I did. We also had Devil's Mark today, which this right here was an initial draw on liquidity, or what I want to see get taken out, because, oh wait, no. I think it was one at 6 a.m. It was a 6 a.m. Devil's Mark, which I can go in depth in that real quick. All it is just an area lacking manipulation off the open. Since I'm using a 4-hour, pretty sure this is either a 4 or 30-minute power of 3, I'm going to go in depth on the Devil's Mark real quick. So let's look for 6 a.m. and I'll show you guys. Right here, 6 a.m. This, as you could see, we have absolutely off the open right here of 6 a.m. We have absolutely no wick. So anything below here, I'd say this is more of just accumulation until we come back up to re-manipulate this high, because we had straight move off and we basically just had a run straight lower, ran out this low. What is going to be our next target? What are we going to be drawing to next? My more I mean, of course we have buy side, but one of my more confident areas would be right here. And what else do we have one? Hey, Risk Reward, you remember what we talked about earlier today with the Devil's Mark? Or what I said the earlier draw on liquidity was?
You know,
Do you remember?
my internet's lagging out like crazy, but yeah, I
You're
kind of
good.
do.
Yeah. But basically, I want to see it get met, and it got met pretty well, in my opinion. So, what else did I had? It was just 15 minutes civvy, being respected on the higher time frame. You could see a new day opening gap right here. These two red lines are the new day opening gap, and this is our 15-minute civvy. I'm gonna start using those words. I'm gonna become really technical with my analysis. But let's go one more time just to look for any type of trades that we could have gone into, because okay, we did not run this high, so we formed equal highs right here. You can see a ton of equal highs right here. Oh, we did run it perfect. Okay, running out this high should have opened, I guess, you can call this a Judas swing, but we still have the anticipation of going higher because run out this low right here. Let's see if we have any other higher time frame PD array that would be supporting the idea of a long. This low and this low. We run up these two lows, and this would be pretty clean. So we have a draw higher, we ran out lows, and we're expecting to go higher. So what would you call this run? Oh wait, no, yeah, this was the run below the lows. What would you call this run lower right here if we're already anticipating to go higher? Someone tell me. Tell me. That's a Judas swing. Judas swing. Run lower, it's against where we want to go in our draw on liquidity, but once you're able to identify this, I mean, it'd be pretty good to look for longs after you can do that, because using this logic with a forced standard deviation, you know that we're going to potentially reverse and run out our devil's mark as the target, or maybe even buy side. Okay, let's just go over questions. Let's make this quick. Do we have any questions right now? Anything you guys want to go over?
What is Devil's Mark?
It is a candle that has formed with no wick on
Oh,
one
Wick.
side.
Okay. Okay. Yeah. Yeah. Yeah.
Yeah,
Yeah.
so
Yeah.
it could either be this or it could be this. And
Yeah. I
that's
think
like,
Slick pointed that out to me
yeah,
during school. But
it's a candle, it's power
okay.
3 without manipulation, making it a viable draw on liquidity.
Okay.
I
Are you
wish I,
still doing
yeah, we're still doing recap. I wish I had a way better, I wish I had a better example of this. I had one earlier. Yeah, we're changing the chart colors. This is better in my opinion. Okay, an
Yo, I have a
intermarket
question.
sequential SMT. What's up?
Do you recommend like waiting until 9 a.m. every day to trade to
That's
like get
how I've always done it. Oh wait, sorry to interrupt.
for like 4 hour power three?
4 hour power 3. I mean, I wouldn't really recommend it. You don't have to wake up for any certain time to trade. I have always done it as a habit, but ICT is now starting to touch on trading basically 1 hour of the day from like 7 to 8, 8 to 9, 9 to 10, like trading on those times and just mastering it. I don't know how I feel about that entirely, but that's what ICT is preaching about right now. Alright, and since trades I take in a day, my max trades I take in a day is 2 at the moment. My max loss was usually $500 in a day, which that kind of drove me into the ground with the new market conditions, which is why I decided to turn back into being a student. But, I mean, I'm doing pretty good overall for my trading because I've been hitting a lot of wins that, I mean, I just gotta learn how to control my sizing. That's the only reason why I'm going back to being a student. But it's starting to go back to normal, as we can see right here. And an intermarket sequential SMT, I can go over that. I usually wouldn't, but I want to go over it because this is the first recap we had in a while, and I like late night recaps. So you could see these quarters that we have right here, Q2, Q3, and then we have Q4. All we want, sequential SMT, it's extremely simple. You literally just look for SMT within 2 quarters, and that's sequential SMT. And I'm going to go double check Will's notes real quick just to make sure. So I'm going to show you because he has a ton of notes on it. So let's look at this just so I can confirm with this. So I'm not feeding this information to you guys. Revolving true open sequential SMT right here. This is Dave's private mentorship right here. And I'll look at Silver Bullet too. And look, whoa, this is messed up. I gotta read this properly. I gotta see where he has the bearish. Okay, so you can see these two highs right here. SMT inside of what was it, Q3 and Q4 right here. So Q3, Q4, that is sequential SMT. I can't really. I tried sharing it and it doesn't work. He shared it to only me and one other person, but I'll get it sorted out in the future. But I have that. Then I also have my notes that I might release. What's up, J Trades? How you doing, bro? I also have. Whoa! Stop messing with me. It's. Hold up. My Notion's tweaking out. Oh no, I don't think I can get out. Okay, here we go. This is mine. So right here. Where is it? My notes. I have my notes, or this is my studying recently. I was about to rewatch core content. Oh yeah, I didn't put anything in here. But I was about to rewatch core content, and ICT dropped its 24 mentorship. I'm going through all of it right now, and this is extremely helpful in my opinion. It helps refresh my ideas on the concepts and how I view the market, which is extremely good. It helped me frame a trade, realizing that we can use the new day opening gap as kind of a breakaway gap if we fail to fill lower portions. That's helped me a lot with my trades. And I'll check out the silver bullet real quick. Silver bullet, I'm going to look for the 5-minute silver bullet first initially. So let's just move this quicker so I could section out what I'm looking for. It doesn't look like it occurred on the 5 minutes, so we're going to go down to the 1 minute. I mean, we know we're going to go bullish. I gave you the reasons why we're going to be looking for bullish. And the way I'd be trading the silver bullet now, run this low, run this low, and we did not run that low, which is okay. We're already bullish. We have our Judas swing into 10 p.m. We start running up higher. We just want to take continuation of our target to buy side liquidity. This could be a low-hanging fruit objective. Let me see how much handles this would be. Because the way I'm trading right now, or I would trade the silver bullet, is not using consequent encroachment, but rather using the quadrants. As you can see right here, this would be pretty helpful. So using the fair value gap quadrants. I'm going to explain this a little bit more in depth. I went over this with EG, but basically, when you are taking a trade, and it's going to be a higher probability trade with higher strength, you want to be with a drawn liquidity in mind, and I gave you the reasons why we're going to be looking for longs. With that in mind, we want to be taking trades using the two... How do I say this? How do I explain this the way ICT did? ICT basically said he missed out on so many trades trying to interrupt consequent encroachment, but rather the simpler option, if you're able to handle the risk, take it off the 2/5 or the 2/5 quadrant. How do I explain this? 2/5, okay, 0, 2/5, 0.5, 75, and 4. So you split up the fair value gap into different sections, use equilibrium 2 times inside. That's even more confusing. Basically just quarters to the fair value gap. You want to enter off this one, the equilibrium between the equilibrium. And basically when a fair value gap fails to meet equilibrium, that's a really good sign that price is extremely strong and significant. We want to be going up higher. We have a narrative to push us up higher. So you want to be long off of this. What could you be having your stop loss outside of? I personally would just go with a 15 handle stop to stay with a more mechanical model, which again, I don't really like mechanical models. I prefer a more Swiss Army knife type of trading. But for beginners, this is a model that'll work for you, and at least a 1 to 2, but targeting our low hanging fruit, you can see tap into 2/5, run up to our low hanging fruit target. That's the logic behind the trade. And yeah, that's all I can say. I really wish I could touch on this more, but let's bust out my notes so I can actually show you what I'm talking about. Boom. So it gets real close. No, this is just the order block. I was going to call this the italics order block, but failing to meet consequent encroachment makes it stronger for us to go lower. We can use this to read and study price. When trending lower, we want to see how we treat each SIBI. And we could color outside of the lines too and permit that, which what we did here, but as long as the body is respected, and I'm going to show you another example, or the example we had, the body, as long as the body is respected, that gives us a clear narrative in reading price, okay? And blah, 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 blah. That's the rest of it. And having the attention span of it, or having a TikTok mindset, you're not going to get anywhere in life if you have an attention span of an effing gnat. And this stuff is available to you to learn. I've been studying like 3 to 4 hours a day now recently. More studying. I haven't had the chance to backtest. I feel like I'm slacking off a bit on that portion, but I'm staying productive. I'm doing other stuff that's considered productive. But at the current moment, my trading, it's been more split off. So, I mean, I would really recommend studying 1 at a time or 2 episodes at a time, depending on what you're watching. I'd say you could get away with watching 3 or 4 episodes of core content, 2 episodes of 2022 mentorship, or literally just 1 2023 mentorship episode. Not sequentially, but literally just 1 of those 3 a day. That's the way you want to be studying ICT. You do not want to, because your brain, you need to sleep to actually retain the information. If you learn like 6 hours of content, and like, how much of that do you think you're actually going to retain instead of quality? A quality like 2 hours that you're focused on, and going to sleep, and then having all that in your brain. So you want quality over quantity when it comes to studying. Trust me. And ICT, he says that so much too. Deal with this, yeah. The Jade Master. You just got to deal with it. You have patience and stuff. Okay, questions after recap. Actually, we can just answer this right now, because recap we can have for as long.
Alright, let's go.
Okay, let's go. So Swiss Army knife, it's basically the way of trading with.
Mantas,
You want to explain it, EG?
I got something to add to
Yeah, what's
the
up?
fair value gap quarters thing.
Mhm.
A question I get a lot when I'm explaining that whole system is, what if it stops you out trying to keep your stop right below that quarter of the fair value gap, and those types of questions come when you don't trust your model, right?
Mhm.
If you are, you know, shaky in the system that you have set out for yourself, and you're asking questions like, "But what if I get stopped out?" or "But what if I get stopped out and then it turns around in my direction?" You're worried about the wrong things in your trading.
Yeah.
Point blank, period. And then going into the Swiss Army knife, that whole thing is something me and Mantis were talking about it
Yep.
earlier. It's basically not getting too hooked on the names of
A set strategy.
each, like, a set strategy or a set model, those types of things. When you're watching ICT, those are for when you're just starting out in your trading and you don't know what you're doing. You're a really bad analyst and a really bad risk manager, things like that. You're supposed to use those to get your foothold and get your grasp, and then eventually branch out and learn how to read the market your own way and be able to
Mhm.
go in and know that at any point in the day, should you so choose, you can go out and take out however much money you need to.
Exactly. I'm gonna go into it in the way I explained it. And like, I was literally driving. And I was like, shoot, I think that's a good way to explain it. Instead of wanting a certain amount of confluences or a set amount, like for this one, 2022 model, mission market structure shift, retracement, run lower. It's more of reading price for what it is. Like being able to determine how, yeah, it's basically reading price of what you can see, similar to like how you can see or determine how price is gonna move based on the SIBIs, the bodies respect. Whoa, how the bodies respect it, how much order blocks are being formed, the strength and willingness of price, what our current, like, if we're moving towards any standard deviation. We're using all that to frame a trade off of that. So it's not really trading with a set strategy. I'm still working on the best way to define it, but it's really hard to define something that isn't defined. So I'm gonna keep it at that. And another thing about this, being unsure in your stop loss, I mean, I feel like it's more of a matter of, hmm, it's kind of hard to determine what the market is going to do in that sense, or if it's going to take you out, if it's going to have a run lower, return into discount, because I'm pretty sure this one is not inside of a discount. So that could shake some people out or be unconfident in trading or taking the trade itself because it's not inside of a discount. But being able to determine what our strength is and taking a trade off of, I think what ICT says is best, which is just the quadrant, and having your stop, I mean, you could have it based on and just leave a market stop to see whether or not the bodies respect this, or if we completely disrespect it, or just overall how we're treating this BSC in general. Hold up. We'll use this one. Okay, perfect. Let's go to Mr. Wood's next question. Mm-hmm. Yeah, how far we can go, press the buttons. Okay, is entering off imbalance, tap, not the strat anymore. I mean, what, are you talking about, like silver bullet wheel, or what are you talking about?
Oh, I'm talking about like when you're talking about like the quarterly theory imbalance. When you said the EQ between the EQ.
Oh, okay.
Yeah.
Yeah, it's basically, it kind of changed the strat. I really want to see, or ICT, he said in the, like an hour and 22 minutes into the second of the 3-day workshops. So it was like the middle of the thing he dropped, saying how he always prefers, or says it's far better for people to be taking off of this, basically, I don't know what to call it, 75 quadrant or 25 quadrant. There's so many names for it. I'm just gonna call it, two equal. I need
Point
a better word for
four.
it. Point four. I'll call it point four. Point four. No, that's gonna confuse people. 0.25. We're gonna go 0.25, 0.25, 0.5. Okay. So 0.25. That's basically the better place to be entering, because if we're failing to meet consequent encroachment, price is in your favor. I think that's probably the best way to put it. I already went over that in my notes though. I'm not gonna be repetitive with what I say. Quarterly with imbalance, I don't really know too much about quarterly itself. I'm gonna have to refer you to Will, which is doing his own little quarterly expeditions right now. Attention span is more about, let me think, I have such a good way for this. Evergreen might too, but how can I think about this properly? Attention span, remove all distractions. As you can see, currently my room is completely different. It's separated from everything else. I leave my phone, everything that can distract me in a whole different room, and I just get to it because it's genuinely fun to study ICT. You learn so many new things, and just think about more about the journey. It's fun. Okay, trust me, it's
I have
fun to watch
I have
ICT.
an extremist view on that.
Really? You don't like it?
No. The whole attention span thing. If you're watching videos about, how to stop procrastinating, how to have a better attention span, how to get off TikTok, there's no hope for you.
Yeah.
It,
You just gotta tell yourself to
yeah,
lock in. Okay.
literally, you just gotta lock in. No, I don't.
Yeah, you remember, hey, if you guys are watching the workshop, ICT literally touched on how will being backed into a corner will affect your trading. In the 2024 mentorship, he basically went into a whole spiel about if you're backed into a corner financially and you're trying to trade, you are not going to be thinking about the right things. You are going to be focused on the money. There's no other way to put it. He was extremely confident in saying if you are backed into a corner financially, you will not be focusing on the right things. You will not be able to spot the proper models. You'll be more focused on how much money you can make off setups that you probably missed or what setup can bring you the most money fastest. Having that type of what is the word for it? F this. Being backed into a corner. There we go. Being backed into a corner financially will hinder your trading heavily. So that's why Cameron, his son, Caleb, his son, has a job and a side hustle which he wants monetization from YouTube so he can trade freely without worrying about the finances ever. And that is, in ICT's word, it's going to help him be one of the better traders out there because when you're able to fully focus on price like I've been doing, because I'm not really struggling financially. But when you're able to fully focus on price, that is where you are going to have almost your entire mind towards it. You're not going to be distracted. You're not going to be focused on different things like the money. You're going to be focused purely on what price is giving you and what the market is trying to tell you, like the signatures. Final question, let's see this. I like your questions, Will, or Restore World, thank you. More time backtesting, more time studying, blah, 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 studying. What about it?
Do you think it's more important when you're kind of in that middle? So, like, let's say you don't know everything with all the studying. Like, I already did all of core content.
Yeah.
Did a bunch of day stuff. I haven't done 22 mentorship and 24 mentorship.
Do 22.
And then when it comes to backtesting, I've done a lot of backtesting, but I haven't, like, finished doing all my data collection. What do you think I should prioritize right now?
Ditch the backtesting. Just trust me on that, bro. You gotta ditch the backtesting. ICT, start hating on it too. Like a lot of the things, I have really good memory when it comes to ICT for some reason, but Lily, he was trashing a market replay and backtesting itself. He wants you to genuinely watch the candles form, sit down for almost an hour, and just observe how the prices, how the candlesticks are forming. If you're able to analyze and realize the setups that are becoming or forming before you and the logic behind them, because when you're backtesting, you can push through those candles so quickly. And what did you say? Oh yeah, studying. Go to the 2022 mentorship and start journaling down the stuff he says live. Because even back in December, I was fully advanced with my trading. I was starting to integrate quarterly. I was starting to take more advanced trades. I watched the 2022 mentorship. It was so eye-opening to me. It was insane. You learn about unicorns using the 2-minute, 3-minute, 4-minute time frame. It actually saved me a ton. And then the advanced theory and breaker. I'll go to December real quick and open up one of the random 2022 stuff, and I'll show you. 2022 episode 33. Let's go to 34. This one was boring. 33, his son skills account. Yep. Nope. 33, this one is bad too. 27 was good. Live trade management, utilize runners. Hold up, where would it be? Episode 34. 35. Nope, I can't find it. What was the good one? I think it was maybe it would have been 20. I don't remember. I forgot what the good one was. Nope, not that one. Not this one. Bad P. What am I doing? I am fumbling this. Hold up. So what's their price for something knife in 2000 more personal? Yeah, right. Okay. I can't find it. I'm sorry. It was probably episode 33 though, or it was on a blend and it didn't save. Strizzy.
Yeah.
Motorcycle. At what point in mastery and your strategy were you focused? Backup strategy of more start going south. Hold on, my mind is just jumbled right now. I haven't had water in a while.
Hey, why did you kick me?
I'm sorry.
Don't do it again.
Okay. Trying to lose my mind. I'm sorry, I literally can't read. My mind is blank right now. I don't know what
Go
happened.
drink some water,
No,
man.
I don't have water.
Just put a little break on the
No,
recap.
I
Just
swear I
jump
don't have
in.
water.
You don't have
I
water.
don't have water. The stores are closed too.
He's
Like in your
picky.
house?
I wasn't home all day.
He
Oh, you
only
don't have
likes
like a
ice
tap in your house?
I didn't buy any, Danny.
What
Yeah,
about your
he's picky.
washroom?
I'm not gonna drink out of the faucet. I'm sorry.
Yeah, he only likes Ice Mountain.
Okay, I'm sorry. Hold on.
Mike has to.
No, because the stuff in the actual tap water gives me such a bad headache. The fluoride. Okay, I'll
Oh,
lock in
yes.
real quick. 3, 2, 1, boom. Okay, at what point in mastery of your strategy should you focus on a backup strategy? I really think you should stick with your strategy if you know what's gonna work. Because ditching your strategy the moment it fails, how are you gonna get through it? What's it? I can't remember this. F this. Okay, basically, you don't want to ditch your strategy if it starts going south. You have to have like a proof that the strategy is not going to work before you ditch it and actually start switching. And having both foundational skills, so skill, ceiling strategies, X Silver Bullet, and trading ICT mentorship. Yeah, I think that'd be good. I mean, just try reading price, bro. Trust me. Try reading price. It was episode 24, I think. It might have been. It was the ones I did on the plane. Yeah, that was it. Okay, yeah, I found it.
Hey, was I right, by the way?
About what?
Did it take you a year to become profitable?
Strizzy, how long have I been trading for?
2 years. Why?
Whoa, Strizzy trades?
No.
Oh.
I'm just I'm just a side character, sorry. Did Mantas die?
He just passed out from dehydration.
Uh-oh.
Oh no.
Oh,
Strizzy,
no. What?
you should drive him over some water.
I can't. I'm like technically like 4 hours away, but
Oh, you should walk then.
oh. I don't know.
I don't know what's up with me right now.
Oh,
I
I
just
think-
losing my mind in the middle of the recap.
Mitty, why don't you just go to like Taco Bell or something and get water?
Oh yeah.
Just ask. I mean, they use faucet water anyway, but maybe that'll make you feel better.
That's true.
Oh, let's see.
Okay, I'm sorry about that. Alright. 2022 model. I think I like the 20. Okay. Number 1 is for beginners. I like the Silver Bullet. Number 2 is the 2022. Number 3 is the Market Maker model. So it's beginner, intermediate, and hardcore. That's probably the best way to learn it off of.
Hey, Manty.
Yeah. What are you?
Hey, why don't you just go to a gas station?
I will probably. I'll have it figured out. Don't worry.
Or maybe just go get some refreshments.
Okay, trading gaps. Wait, what type of trading gaps? Do you do those new day opening gaps, new week opening gaps, relative trading hour, like these gaps right here, these gaps? Because I usually expect us to fill it, that regular trading hour gap. There's like all sorts of gaps. Comes open 24/7. I'll do it. Oh, come on! I was locked in. I don't know how I lost that. It just messed me up. I'm sorry.
Alright. Count down from 3, just lock in. Ready? 3, 2,
Wait,
1.
what? 3, 2,
go.
1. Let's lock in. Okay. We don't really have much else to go over for the charts anyways. So, what do you guys think? Or what are you guys thinking right now?
One more question.
What's up?
I don't think. When it comes to the what's it called? What's it called?
Devil's Mark.
Yeah, Devil's Mark. When it comes to that opening price, how do you treat it? Do you treat it as like a target or like a point of reversal?
A draw on liquidity. I treat it as a draw on liquidity.
All right.
So I really think when we start
So
reversing, we're not just gonna leave it behind. We have to remanipulate that area, one way or another.
all right, that makes sense. So you think that everything inside of it is just accumulation then?
It's more of distribution without manipulation. I don't. The logic behind it is
That's
so flawed, but it works. It's ridiculous.
yeah,
Or there was a lack of significant manipulation above or below a
yeah.
high, which already had distribution. So we have to go to smash
Oh,
out the people who were already short.
so basically it's just price heat seeking
I was
a
on
level.
PPC. So basically, stop losses are stop. Swiss Army knife versus an insurance policy. Yeah, I mean, yeah, it's more like you're paying your stop loss to protect you from blowing your account. That's all it is. But yeah, it's more of insurance. That's good. I remember that. That wasn't. When did I learn that one? That was in the day one, 33 minutes into the 3-day workshop. It was 33:12 when ICT mentioned the exact thing. Stop losses are basically insurance. What a Swiss Army knife. I
Uh,
remember seeing that.
33 minutes exactly is crazy.
Bro, was I right? Do you know?
I don't know, but that's
Listen.
definitely nerd status.
Bro, okay, I was driving home from summer school with it playing in the background, just listening to it, and I was at a stop. I was at a stop sign for so long, and I heard this. It just sectioned out. ICT was talking about this. It's insurance, blah blah blah. And I looked at the clock. It was 33:12, 33:13. Or I looked at the video playing. So that's the only reason why I remember it. Either way, yeah, I think that's about it. Do we have anything else? Okay. Yeah,
I'm still
intermarket
thinking
sequential.
for
Yes, I
7.
use ISIM. You guys are Okay. I don't want to call you guys nerds, but literally just call it SSMT. Intermarket sequential SMT. Bro, it's literally just SMT with Q3, Q4. Ah! I'm sorry, walking people. It's a rough night.
I think you should call a recap now.
Let's call a recap. Good night, people.
All right,
Good night,
good night,
everyone.
man.